Bitcoin could be in the process of completing its second longest rally since the cycle low in November of 2022. So I want to pose the question today and find out the answers to what could be the worst case scenario for Bitcoin and cryptos during this bull market run. I want to look at time and price action because, of course, that's what we do here. It's your home of macro cycle analysis, studying the past to forecast the future across crypto, Bitcoin, stock markets that are heading into new all-time highs, and of course, the real estate cycle. Links in the top of the video description, you can see here, are for our TIA report. The thing you want to do here is subscribe to this so you can get free access to Discord. Come and check out the trading results of the members who are killing the gains here in their crypto trades. And of course, check out the TIA reviews as well for TIA Premium. All right, guys, let's dive straight in. We've got a few narratives on what is going on in the markets as per usual. We're seeing some good CPI numbers come out, but you may have noticed that the calls and the media headlines around this time in the market for CPI are nowhere near as loud as they have been throughout 2022 and 2023. It almost seems like the hysteria for understanding what's going on with inflation is basically just dying off. Remember, the peak was back here in July of 2022, and of course, all of that extreme fear came through in 2022. Interest rates began to rise, inflation was rampant, and basically from that point, from the extreme fear, the inflation started to come down. We're just looking at the data, and as analysts, it's up to us to interpret that data, which then becomes our own statistics. And many, I guess, have not interpreted this data too well because they have expected the markets to collapse. We know that for sure because, they're just about getting to new all-time highs. And for the Dow Jones, we're now measuring it from the all-time high to the profitable end. It's up 0.5%. And this is the highest close in history. Since the Dow Jones began, this is the highest price. So the main thing I'm pointing out here is the extreme fear always happens at the bottom of the market. You guys must know that by now. And the extreme FOMO, the extreme greed, always happens at the peaks of the market. That's why I want to have a look at the fear and greed indexes again. So some of our trusty tools. Essentially, inflation has come down. Headlines, or I wouldn't say non-existent, but you don't hear about them anywhere near as much as what we did at the top. So this is part of your investor and trader hat that you need to understand as you continue on in these markets because it's never going to go away. We saw a little bit of inflation come back and basically it's dropped off again since the last couple of months. The next thing that's up on the list is the federal funds rate. It's at 5.5% for the US. Then we have the meetings. Then you have, I think there's some UK numbers as well. Essentially, it's just the same thing over and over again for the media. And basically, it's getting non-existent and the markets have continued up. The other part of the narrative in this case for Bitcoin and crypto is the next bill here, the bill to crack down on crypto. Now, I've already added this to the wall of worry because I don't think this is going to be a problem at all. Look at the track record here. Absolutely terrible. Warren's bills, 36 bills, 23 to 24, 0 passed. 103 bills, 0 passed. 0, 0, 0. So basically, none of these bills get passed. And we can look at some of the other headlines. Over 330 bills, only 11 have passed, just depending on which one they're looking at here. This, to me, is essentially what happened in the narratives in the previous bull markets. And you can see why I spend a lot of time on understanding what the narratives are of the media and basically how they are always wrong. And any analyst that is telling you the same thing that the media is telling you, huge, massive F-off red flag, in my opinion, especially if it is very consistent with the media headlines over and over again. There can be the occasions, of course, because it's not always 100% wrong, but anyone that is consistently talking about those sort of headlines as professional traders or investors or analysts or whatever, hedge fund managers, any of that crap that we see on Twitter, well, typically it's been on the wrong side of the market. So I've put these down as walls of worry. The market goes up on a wall of worry. We had the China bans Bitcoin throughout 2017. We had it throughout 2021. And I suspect, well, we're going to get that as well. It's maybe not the main headline, but it's always a crackdown on crypto, a crackdown on Bitcoin, a crackdown on whatever they want to crack down on. Not too concerned. Markets are heading up. And we do need some sort of narrative when the market is ready in its time sense to have a bit of a pause, which we'll get to in BTC as we look at some of these major time signals that are coming into play. So as an update for the stock markets, the S&P is now getting even closer, 2.3% away from a new all-time high. Yesterday was another day up. The market's just opened again, and it's up again. The Nasdaq, less than 1% away from a new all-time high. It's just opened again today, and it's pushed up higher again. So any of that inflation data and the interest rate news and all this sort of stuff, no matter what it is at this stage, it is really having almost no effect on the market. Remember, we looked at the peak of inflation here. You can see the months of April, May, June, July, August, September, pretty much the peak. And you can go back to the Dow Jones and you look at where these peaks were. There is your June, July, there is your August, September, October, and the market's basically taken off from that point. So the market bottomed on the worst news, and the worst fear at the time was inflation, and the inflation fear is basically going away. Markets are absolutely crazy. There will be something else that comes up, no doubts about it, but along the way, we do have to have some healthy corrections. As we like to say here at TIA, you need these things in the market to ensure that the markets are getting ready to go again. You need to digest the moves to the upside. Fear and greed is a helpful tool here. We can see that markets are at greed, not at extreme greed yet, but over the timeline, as we've looked at just the last couple of weeks, we've been trading around these levels for quite a period of time, about 3 or so weeks. We can go higher. We can get all the way up here into the 80s, into that extreme greed before a major correction. And at this stage, it looks like we are heading up to that point. So pay particular attention to the extreme greed readings for the stock market if the markets get to that point. And essentially, maybe at that stage, there'll be some other narrative that comes through that enables the market to have a pullback, a healthy correction, and digest the enormous move to the upside. So that's a look at the stock markets. And we suspect it's going to continue on into 2024. Let's look at crypto's fear and greed index. We've covered this for many years now, looking at where we currently sit in the 70s. And I pointed out in the previous videos, I think somewhere in the 70s to 80s is a reason enough to think that we could get a pullback there. Ideally, we like to see it above the 80s, but it doesn't mean we're always going to get there, especially when we're not at that new all-time high territory. We did manage to see that in 2019 when Bitcoin took off and moved into that extreme greed stage of June of 2019 when it went to 14K. But for now, maybe this is where the market peaks out at, and we need to have a bit of a cooling off period, a period where we get some sort of significant correction to calm the greed that's out there in the market. Remember the comments that we've seen a lot over the last few weeks where the markets head up, and you've got a lot of the altcoin degens saying, this is that altcoin season that everyone's been waiting for. But again, I think it's still too early. I think we're sort of somewhere in this stage or the stage here, basically in this block of time before we get into this major cycle, which I think begins later in 2024, based on a lot of stuff that we've looked at in the previous videos, like yesterday, where we need to see the stock markets head into new all-time high territory and have a bit of a test, maybe come back a little bit, and then have another crack at the all-time high so that that risk comes into the market. So we get more risk coming into the market, because you may or may not know, when markets get into new all-time high territory, it's really good for the headlines, which is potentially why, and I just thought of this then, which is why you're starting to see this inflation stuff cool off in the headlines, because we can see the prices going up. It's not guaranteed, like nothing is in the market, but if we do get these new all-time highs, then they have to start shifting their headlines and the narrative to the all-time highs, which then, there's a lot of thens because this is all part of the game, which then causes these big blow-off moves which coincide with the time that Bitcoin is in its all-time high territory. So they take time to formulate. Eventually, when they do get their run on, it's all hell breaks loose everywhere and everyone goes absolutely ballistic for risk. They're all looking for returns. So to the fear and greed, that might be a reason why we need a little bit of time to cool off here. And as I talked about in the intro, this has been one of the longest streaks to the upside. We got a September low. This was the point exactly when a lot of people were calling for further downside. I remember that very vividly. You might have seen it over on Twitter as well, as you've got a lot of the pro guys or the pro guys saying, here it is. The market was about to collapse. And it was almost to that date. You could probably search the 11th of September. Interesting date nonetheless, isn't it? For the market to come down, a lot of fear to come back into the market. That was the low. It reversed from there and away we went from that point. We've now been up for 85 days from that low. So roughly speaking, about 3 months. And what you'll see is Bitcoin loves a 30, 60, 90-day turn. Look at the low to that top in February, 92 days. Look at the low to the low, 90 days. The move from the top to the low here, if you remember, was about 60 days as well. So basically on that 2-month turn, there's your 62 days. There it is there. And then your low to the next low, about 88 days. So again, on that 3 month. Remember, this is not having to be exact on the days. You need some tolerance here, as everything does in trading. You can see again, 60 days here. Sometimes it's exact, sometimes it's a day or two either side. You got another 60-day move to the downside. So you got 60 days down, 60 days down. We had a nice move from the low to the next low of about 97. We had this move here about 88. We've had 92 to the upside, low to a high. So these are some of those extreme moves in the market from those bottom to the top. And you see a lot of those news narratives from that point. That was the banking crisis. So that was a clear end to that trend before the next trend came about. We had SEC suing Bitcoin, you name it. There's been a narrative, and I have posted about that here on the Wall of Worry. So you can go back and review that. 85 days up, getting close to that 90 days. Maybe this thing holds out here and goes for one last screech to the upside, gets us into those sort of 97 days we've seen in the past. You can see here. Nonetheless, the thing I'm looking at here is to the downside. So we want to get a bit of an idea on time and price for what we're calling the bull market. Now I've got even more days here. It gets a little bit messy. The main thing I just want to show you here is the market loves 90 days. There's 120. You can see these monthly calls here that continue to play out. And for some people, it's a little bit tricky to get their head around, and sometimes it frustrates people. I can understand that, especially when I started learning about timeframes. This frustrated me because I wanted exacts, and there is nothing exact in the market. So once I could put that aside, it became a lot easier to grasp the concept of turning points and just looking for these monthly, 2 monthly, 3 monthly sort of turns, and to understand that this is what happens in the market. Some have gone into moon phases. Let's leave that for another video. For now, let's just look at how these turns happen every couple of months. Now, to the upside, we are seeing longer moves to the upside. 90 odd days up here, that was about 30 there. We had 85 to the upside here. In the bear market, it was quite difficult to get anything more than about 2 months. And that was basically the biggest move there. So this is why, another major reason why this, in my opinion, from my analysis, cannot be a bear market rally. The moves to the upside are far longer than any of the moves that we saw in this bear market. So if you keep that in your tool belt, you will do amazingly well in your trading and investing for the rest of your life. If you can understand that when it comes to time, there is more energy coming into the market for longer periods of time, pushing the market up. Take that, keep it in your tool belt. It is a special tool that many do not understand. Okay, so now we've got longer time frames up here, and you can see we have these shorter moves to the downside. It doesn't mean that every move has to be this exact time frame, but we're looking at worst case scenarios. Let's look at something that we have seen in the past. We have seen roughly 60 days to the downside. This one was a little shorter here, but we've seen 60 days in this bear market. So let's measure out 60 days as they've been the longest time frames to the downside. So let's have a look at the top. Come out roughly 62 days, brings us into February. So early February could be a good area for a turn. That's providing that this high stays in. If we get a different move here, then we would just come out and measure that move from wherever that high is. But for now, this is the high that we have. So potentially 2 months. It sounds absolutely wild. Now that could be the worst case based on what we have seen there. But if this particular move is one of the strongest moves, and this is the major move that we have for the first stage of the bull market, maybe this can extend out a little further to give us more of a pullback, because at the end of the day, this market has been up for about 380 days. So we've been up for quite a long amount of time here. So sometimes it needs a little bit longer to pull back to digest the phenomenal move that it's had. So let's look at half of that number, 380, which is about 190. And if you wanted to give it a little more tolerance, about 180, which is essentially 6 months. Now, all I'm saying with that 6 months is it could be somewhere around that period that it takes Bitcoin to digest the move before it starts to have another crack at the high. It kind of works in with the halving, which probably shows up a little better here. You've got the halving right now, and then the market starts to head up over that May-June period to try and test that 50% again, which may in fact take out 45K. Now we'll redo these numbers if the market goes above the current top here at 45. If we get that one last attempt at trying to take out that high. But I would say that they're probably not too far off these numbers themselves. The 180 may not be the final low, but it might be something like a low and then a higher low, and then we attempt to crack a little higher. So we've got some rough time frames. I did say worst case in a bull market. I'm looking at the 60 days. We know that it has done 30 days in the past. This has been a long run up of about 380 days, so it might need a little more time to digest this pretty significant move, especially as the narratives may begin to wear off with the ETF, spot ETF coming out next month in a few weeks. We've got the halving news coming up, and you have all the rest of those other countries who are saying they're buying Bitcoin, like El Salvador, as part of their bonds and all this sort of stuff, right? So we're putting together our story for what we think is happening here. If that does take some time, what about the price? Well, we've got our first 50% level here at roughly $35,000, basically straight through the middle of this first consolidation. Not such a bad thing. It seems like a pretty reasonable area. Now, if it is a bigger correction, let's take it back to the banking crisis low. Well, takes us out to those tops again, around $32,300. That's if this current high is the high for now. So two significant areas there which have had previous resistance, may become support. It does have some time. So that for me is a kind of a balanced view over the next couple of months, probably within the first quarter, maybe into that second quarter of 2024, if in fact this is the top, right? The worst case is because, of course, I've said this is the worst case. Let's take it back all the way to roughly around $30,000 because we go all the way back to the cycle low here, the FTX collapse cycle low to this current top. So we've got a couple of numbers to look at there, somewhere between that 30 and 35K. I think that's pretty reasonable for a lot of people to expect if, in fact, this is the top. What if the market does run up that extra little bit and we attempt 48K? Well, that would just bring out the levels to a little higher here, roughly 31,800. It'll be roughly 33,800 for the banking crisis low, and then back to these lows in September of roughly 36.5. So it's somewhere within that sort of low to mid $30,000. Should this area be the top at that sort of 45K, run a little higher, maybe it's still around that particular area. I'm looking out at about 2 months. Maybe it goes that extra bit longer because a lot of the narratives have worn off and we need time to digest before the market can continue up from that point into 2024. I don't see any sort of big blow off tops for BTC. I don't see this thing taking out the new into a new all-time high in the first half of 2024. And another thing to keep in mind is, of course, the fear and greed index. If we do get these corrections and we take out some of the lows, getting us back to that fear or extreme fear, that could give us another signal that this market is potentially getting ready to put in a bottom. So here's a look at it on the fear and greed index. You can see these lows coming in. That was extreme fear in the red zone. And then you had the FTX collapse. So the biggest collapse that the market has ever seen. And the sentiment was actually higher than the time when the market collapsed in June. So potentially that's what we could be lining up for. Maybe you get that slightly lower price. But the signal here would be if the sentiment was higher than the previous point. Now we looked at the downside price targets using the 50% level and key turning points and obviously those key bottoms. But what have we seen in the past as well? So we looked at the time frames when it came to the downtrends, roughly about 2 months for those last 2 periods. So that can last quite some time and basically take out a lot of buyers who are expecting prices to hold up. In terms of a price or a percentage move, we saw 22%, we saw 20%, And at the banking crisis, we saw 22.5%. Now, I hear often these can't repeat and they could be bigger like what we saw in the past. There was 50% correction here and a 53% correction here. And going back to the previous cycle, there were 30% corrections and 40% corrections throughout this period here. However, let's just use what the market has given us for this particular cycle. And if we look at those, then we go from the top down roughly 22%. What do you know? Comes out at almost dead on the 50% level. In this case, 22.2 was dead on the 50% level. You want to take it a little shallower to 20%, by all means, you're at roughly $36,000. And if we want to go that extra mile and look at 30%, well, 30% takes us back to these previous tops where the market was rejected there, and that brings us back down to around $31,000. Now, if you want to go crazy, because we're talking about worst case scenarios here, absolutely mental, 40% takes us back into the zone of roughly $26,000. What if the market actually ran up to about 48K? Well, that's 45%. So let's have a look back at 40%. That brings us back to about $28,000 to $29,000. Throwing out the crazy 45%, just looking at the 40%, maybe you got your worst case scenario here at 28.9. The reason I don't like to aim for that is that we haven't hit the 48K level yet, and we're taking the absolute worst case. So this is the worst case video, but if we're only waiting for the worst case, well, then that puts us in the position of hoping for the worst case, and we'll probably end up with the worst case scenario to our own portfolios where we just don't enter a trade because it may not happen. I hope that brings you a lot of value today. Keep a lookout for, well, understand the worst case, but at the same time, look at what the probabilities are, and the probabilities could be something similar to what we have seen in the past. Thanks once again, guys. Hit the like and subscribe button for all of your favorite content right down below. Free TIO report. And for the Aussies, check that out. SwiftX, free $40 BTC. I'll see you back here for the next video. Until the next one, take care and peace out.